All right, stock market analysis and projections on the S&P 500, but please do look at this important information on our analytical approach, and you will get a good sense for the work that we do. So take a moment and please do read this slide. All right, stock market. We're going to look at the S&P 500, the NASDAQ, and the Russell. Mostly our focus is on the S&P 500. I'm going to give you some idea of what's going on in this chaotic and widely mixed market that we're looking at right now. It is chaotic as we see these kind of wide swings that we see every single day. And then we're gonna use the MCM, and I'm going to show you the conditions in the market right now in multiple time frames, because this app is just great for people in really all different styles of trading. So let's first take a look at the S&P 500. Remember, we are cycle analysts. What we look at is the rhythms in the market, the energetic movements in the market. Let's take a little tighter look right in here. And if you look on the bottom, you see the arcs. If you're brand new, those are cycle brackets. They're a drawing tool, and it helps us understand the rhythms in the market. You can see the smallest one right in here that is really showing you these movements as they occur in the market. And the fact that this one bottomed right over here at a time that we were looking for really has us believing that the important low really is in place in here. Though, if you look at the bigger cycle bracket right in here, that's the stocks 50 and the Russell. That really gives us a sense that we're going to be in a range in here. And you could see us pointing to the range. Right over here is a bottom warning number at an important 61.8% at 404.35. It needs to get through that. You could see it tried right over there and then began to fail this week in order to give us a warning that this bottom is really in place. And a confirmed level, it would be at about 410.50, where it really is telling us the bottom is in. So right now, we don't have a confirmation. On top of that, we have negative momentum that you can see right there. And this period of risk that you saw right over here, this yellow area right over here, it like this one and like this one, it did not give a huge decline. We thought it would be 30 to 60 points on the downside. It was more like 40, so it got into the zone right there. And it is looking, based on our intermediate and shorter term patterns, like this important bottom is formed. I'll show you the NASDAQ in a moment, and it's very clear relative to this pattern. I just want to take even a tighter look at this right now so that you can see, and when I show you the NASDAQ, you will get a good sense for how much better the NASDAQ has been. So right now, when I look at this on the SPY, this is really the range that we're looking at, that we expect. Right around this area here of around 404 on the upside of the range, and the bottom of the range is right over here, which is right around the warning level at 385.50. So we think it's going to get stuck in this range over here for a number of weeks until this period in here, when you get out into May, when there will be risk that this low could get taken out. I would like to see strength come in here and then just a pullback into this period and then take off on the upside. But right now we're in the bottoming phase, as you see right over here, with momentum not yet turned up. That is our reversal scout, and it's showing you the negative momentum in here. So it has a lot of work to do in this environment right now, with the bank problems on one hand and the potential Fed pause on the other hand, all kind of fighting against each other. So that's why you're getting this range trading that's right in here, while they were all the way up here over 402 and then gave that back in this volatile market that we're in right now. Let's look for it to hold above that 385.50. Were it to break below that synced cycle low, that's synced with all of the other indexes and the daily charts, that's at 380.65. It will open a door for a lot more trouble. So we want to keep our eye on the important numbers. Again, we're expecting this range in here to hold the low about 385.50, the high about 404.35. Breaking out above this would be a very good sign that we're heading up to our 430 target for the year. Breaking below this level of 385 and then certainly 380.65 will be a warning that this bottom did not set. So this is a very important time frame in here. Let's take a look at the NASDAQ when we look right in here. And when I look at the NASDAQ, you're going to see a very different story. The NASDAQ actually took out this key peak over here. And what that says to us when it gets above that level is that it is broken out above the cycle peak resistance that you see right over here. This is a factor of the money moving into growth stocks, and that has lifted the NASDAQ. This is in a much better shape than the S&P 500, and you can see in here that where this cycle comes down over here into May for the stocks 50 and the Russell, it's very likely that it's going to hold up in this area and then take off again, moving up to the targets that we have around 13,200, and even potentially getting up to that next higher target there at around 13,600. So those are our targets for the coming later on in the year, and this looks in much better shape. In contrast to that is the Russell, which is heavily weighed down by these troubled banks, and you can see that it just is not able to pick up at all. The momentum in here is still negative. The momentum in the NASDAQ, by the way, is positive right now. So you could see this hugely divergent market. Now, talk about a hugely divergent market. What I want to really do is head over to our market condition monitor. This is the new app that you'll be able to subscribe to for only $17.50 a month. It's just amazing. And we're looking at the trader version right now. There are two things you can look at, trader and time frames. And we're looking at the intermediate time frame, which takes into consideration our algorithms based on the monthly, weekly, and daily patterns. And you can see in here, if you were an intermediate trader, in other words, maybe an investor or a longer term holder, the S&P 500 is neutral. The QQQ is slightly bullish. The IWM is bearish, and the diamonds, the Dow Jones, are slightly bearish. So you get an idea of a very mixed market in here, from slightly bullish to bearish, looking at these different indexes. This is a very unusual condition based on the huge disparity caused by the bank problems. This is not the conditions that would support a big upside move. At the same time, we're not believing that we're going to support a big downside continuation in here either, because of the overall cyclical patterns I just explained to you. Now, if you were a short, let's say a short-term trader, maybe a swing trader, you could see that what you have in here are conditions that are very bearish for the Dow and the IWM, slightly bearish for the S&P 500, and bullish for the QQQ. And you can see you can go all the way down here to, this is the near term, if you were like a very short-term swing trader, where they are all on the bearish side right now, as you can see. And if you were an intraday trader, if you were scalping, then you would look right over here, and this coincides with the work that you get brought every single week if you're a level 234 member, looking at the SIR live stream, our chart streams, and you'd use this condition with that. So it's fantastic. Let's just go back to this intermediate right over here and go into the scan mode, and let's just look for, which symbols, we have a lot of symbols in here, would be bullish, and you can see that you have the bullish symbols that come up in there, and you can scroll down in here and see all of those. I'm not going to show all of those to you. And if you wanted to look at particular stocks, let's just look at Apple, which has been very strong lately. You can see Apple in here for the intermediate term is bullish looking at that. If you wanted XLC, which is the spider communication, you can see it's slightly bullish in there. You want to look at XLF, which is, well, that's the financials, and you can see that it's bearish. So you can use this in a great way. If you were look in the time frames mode right over here, and I'm going to put this stop the scan, you can see in here, it gives you the for the different time frames. Again, we're going to look at the weekly right over here that I just showed you, and you can see the spiders and the QQQ are on the weekly are overall kind of mixed on there, so you're not getting a really good read on that. And if I go to the let's just look at the 15-minute, which is going on right now as the market's declining, and that gives you a good sense right there on the 15-minute what the conditions are. So it's just a fantastic app. And the change log right over here on the right tells you when these things are changing. And coming up on upgrades, there will be notifications and everything. This is just absolutely amazing. Let's just go back to that trader mode right over here. You could see SPY. If I click on SPY, it's going to bring up all the information for you right there on each of those. So you can see right now the conditions are in the intermediate. Let's just look at the short term right there. Slightly bearish condition on the SPY, very bearish on the IWM, the diamonds, and bullish on the QQQ, a very, very divergent market. This is just an incredible app that we're sharing with you here and showed you how to really understand the conditions of the market based on what kind of a trader you are.